On Friday, Aug 1, 2025 U.S. Markets posted their worst day since May as the S&P 500 fell 1.6%. The Dow dropped 1.2% and the Nasdaq tumbled 2.2%. The Russell 2000 small cap index slipped 2%, reflecting broad weakness across equities. The key catalyst was a surprisingly weak jobs report. Only 73,000 jobs were added in July, well below expectations in prior months. May and June were revised downward by 258,000 jobs combined. The unemployment rate ticked up modestly to 4.2%, further shaking confidence in labor market resilience. In reaction, Treasury yields plunged, especially on the 10-year note 4.24% and 2-year yield 3.71%. Driven by surging expectations for a Fed rate cut in September, odds rose to 85%. Compounding market concern was President Trump's sweeping tariff announcement announcing new import taxes on dozens of countries, pushing the effective U.S. average tariff rate up to 15-20%, with most of the measures slated to take effect on August 7. This trade escalation triggered fears of higher inflation and global retaliation. Political drama added to uncertainty. Trump fired the head of the Bureau of Labor Statistics in response to the jobs report, accusing her of manipulating data. He also criticized Fed Chair Powell, describing him as stubborn and demanding the Fed board take control over rate decisions. Additionally, Fed Governor Adriana Kugler announced her resignation, raising questions about future rate-setting dynamics. On the corporate front, Amazon shares plunged 8% after disappointing growth guidance from its AWS cloud unit, while Apple posted strong services, revenue, and iPhone results, but failed to lift sentiment significantly. Nvidia and other tech names were under pressure amid profit-taking and trade-related concerns, even as earnings from Microsoft and Meta earlier in the week were initially positive contributors. Market indicators sharply deteriorated. The VIX volatility index surged, reflecting investor anxiety, while gold gained modestly as safe haven demand rose. Investors pivoted toward Treasury bonds and cash, anticipating heightened volatility throughout August. Amid elevated macro and geopolitical risks,